friends, welcome to RenwilEducate channel. In today's video, we are going to learn some of the important financial functions in Excel. These financial functions we normally come across in investment and bank loan. So we will see these top 6 financial functions in Excel one by one. Before moving to this session, I request you to subscribe my YouTube channel RenwilEducate, like my videos and share my videos with your friends. Friends, let's begin this session. So, first function is FV function. What is FV? FV is nothing but the future value. So, the syntax of future value function FV rate, NPR, PMT, optional present value and time. Future value function calculates the future value of an investment based on a constant interest rate. Second argument, that is rate, the first argument is rate, interest rate. Second, NPR, that is total number of payment periods, and PMT, the payment made each period, and PV, that is the present value, and the type, the number 0 or 1. This is optional. The payment is due at the beginning of the period. 0 indicates payment is due at the end of the period. Let's see this function with an example. I have interest rate 3%, length of investment 3 years, and the present value is 12,500. Let me write the formula. Equal FV, okay, double click. The first argument is interest rate, comma, length of investment, comma, present value, and I'll close the bracket. So here the future value of this investment is 38,000. This is wrong actually. Here there is one more argument, that is called PMT, the payment made each period. Now payment made each period I am not going to consider. Okay, let me write again this formula. Equal future value, okay, let me drag, collapse, okay, NPR, interest rate, comma, length of investment, comma, next PMT. PMT is year installment paid, so the per month paid or the period. So I'm not going to consider here, so that I will it's not required actually. So next comma, next the present value, that is a present present value is 12,500, and I'll close the bracket. So answer is 13,659.09. So how you will cross check this? So to check this answer is correct or no, let me write here. The investment present value is 12,500. The interest rate is 3%, or I'll bring the same here, and this one interest rate, and I'll multiply, okay, for the first year with 3%. How much I'll get interest? that is 375. So second year my investment will be 12,500 plus the interest accrued in the first year. Okay, this will be my present value. Okay, so I'll copy the same. I'll copy and paste special I'll make so that it will not consider the absolute value. Okay, next, so the second year accrued interest is 386.25. Now third year my present value, this plus the accrued interest 386. Okay, how much value it is? 13,261.05. I will calculate interest on that. That is 3%. That is 397.84. Okay. Now at the end of third year, my investment value will be this 13,261 plus 397.84. So that is 13,659.09, which is matching as per the formula. So this is how you will cross check your the result what the function gave, and it's your manual calculation is matching or no. Okay, let me move on to another formula, that is FV schedule. Now FV schedule, it will return the future value of an initial principal after applying a series of compound interest rates. Here the arguments are only two arguments: future principal, that is present value, and the schedule. The schedule here is an array of interest rates to apply. Let me see this function with an example. Okay, I have interest rates that is 0.3% and present value is 10,000. Now here the argument for me should be array of interest. Okay, so what I have to do, I cannot consider one interest rate here. Instead I need to consider an array of interest rates. So what I will do in this case, I have here interest rates, okay, that is 2, 3, 4%. So I will calculate equal FV schedule, okay, principal, that is 10,000, comma, and array of interest, that is 2, 3, 4%, and I will close the bracket. Now your value 10,926.24. Your answer is, your result is 10,926. How you will calculate? See, example 10,000, here you have the 2% you have, and you will calculate equal 10,000 into 2%, that is 200. Okay, same way again 3%, 300, again 4%. So here 10,000, if you add this all, 10,900 is coming. One thing, the formula says an array of compound interest, so it will add. So when you say 10,200, I will make here I will add the 2% interest, it will be 306, and again I will add here 306. Okay, now my investment, my result should be 10,009. Sorry, I need to add together 10,000 plus 200 plus 306 plus 412. So which is an approximate near to the answer. So this way FV schedule formula is works. Next formula we have Pmt function. Now Pmt function, what it will do? It will calculate the payment for a loan based on a constant payments and a constant interest rate. It is not just on the loan, it can be investment as well. The syntax of Pmt function, Pmt rate, NPR, present value, and optional one future value and time. Now you know what is rate, NPR, PV and FV, which I told you earlier. So let's see this function with an example. Okay, I have interest rate, I have length of investment 3 years. Let me take interest rate 2% and length of investment 4 years. Okay, and I will change the investment to 15,000. Okay, so what the Pmt function says, calculates the payment for a loan based on the constant payments and a constant interest rate. So it will give the payment, the current payment, how much you have to pay, okay, based on the interest rate. So let's see. I have to, my present value is 15,000, okay, and I have interest of 2% and I want to invest 4 years. So what I will write the formula equal Pmt, okay, %, comma, NPR, comma, present value, that is this, and I'll close. So this is what $3,939,000 is the Pmt value. Okay, this value you need to pay every year in order to make it 15,000 over a period of 4 years. Okay, so you can learn more about this function in any platforms. So how you can use this function. Let me move on to another function, that is Ppmt function. Now what is Ppmt? There is two here. There is Ppmt. See what we learned in the previous example. Okay, what we learned in this example, how much amount I have to pay as installment. Now I don't know this installment, how much is the principal amount and how much is the interest. So these two parameters, these two values we are going to learn in the next formula, that is Ppmt function and Ipmt function. Now Ppmt function, what it will do? It will returns the payment on the principal for a given period of for an investment or a loan, whatever. And second, Ipmt function returns the interest payment for a given period. So let's see in the previous example how much is the principal amount and how much is the interest. I'll go to an example. So if I come to example, maybe same example I can take for 2% and 4%. So this is the 2% and the length of years I'll take to 4 years, and for investment in the previous example I took 15,000. So my 3,939 is the installment. Out of this 3,639.36 is the principal amount and 300 is the interest amount. Let me write this formula. Ppmt, okay, rate, comma, PER I will leave as it is. Okay, we are not going to consider this value here, or you can consider as a 1, whatever. NPR is length of investment, comma, present value is 15,000, and I'll close the bracket. So I'll consider as a 1. So you will get the 3000 exactly. The answer 360, 3639. So your value is giving minus. So in order to make that value to positive, so before present value, I will just put the minus sign. So your value will be positive. So how much interest in this installment equal IPMT, okay, interest rate, comma, again PR1, comma, NPR, comma, and present value, I'll close. So 300 is the your interest in that particular installment. If you can, I'll change this to 3%. Okay, automatically it will change. So 4035 your installment. In that 4035, 3585 is the interest, principal amount, and 450 is the interest amount. Let me move on to another formula, that is PV function. The PV function is present value function. Now, same like future value function, we have present value function as well. So the future value gives the future value based on the present value. Now the present value function returns the present value of an investment. Okay, same syntax here. Present value, rate, NPR, PMT, and future value. And we'll see this function with an example. I have interest rate 3%. I'll change it to any percent, 5%. Length of service I will make to 4 years, and I'll change the investment, that is 15,000. Now for future value, if it is 15,000, if I am going to expect 15,000 in 4 years with the interest rate of 5%, the present value of that investment is 12,340.54. If you want to cross check this value, if you want to get this answer, if you want to check this answer is correct or no, let me calculate the interest 5%. Okay, first year, how much interest I'll get? Okay, 617.03. I have to add for this installment, for this present value, I have to add accrued interest. Okay, in the second year, my present value will be 12,957. I have to calculate interest again on that. Okay, same I will do for 3 and 4 year. Okay, and 5th year I'll see how much. At the end of 4th year, you can say, or at the beginning of the 5th year, that is the future value, exactly the same amount is coming. So this is how the present value function works. Next important function we have is NPV. We heard many times this function, NPV function, net present value. This function normally we will use to project the cash flow, and even in the mutual fund industry also to identify the net present value, this formula largely we are using. The syntax is same, rate comma value 1, 2, 3. Here rate is the discount rate and value 1 is important and subsequent values are optional. So along with the NPV function, we will see Irr function as well. Irr function gives the internal rate of return, whereas NPV function gives the net present value. Let me see with an example. Now, I have a cash flow. Initial investment what I made is 250,000, okay, and discount rate is 3%, and my initial investment is 250,000, that is total outflow in the year of 2018, and subsequent year started inflow as well as there is small outflow. Now if I add this total amount, total net flow of 5 years, the net inflow, net 78,000 I have. Now let me calculate what is the net present value of this net flow, equal NPV, okay, rate, that is the discount rate, comma, values. Here values is nothing but net flow, inflow minus outflow, that is the net cash flow, but the first year is the negative amount, that is outflow, there is no inflow. So by default we should not consider this value. So from the second year, what is net cash flow I have, I need to consider these values and I can close the bracket. So the answer here is 307,097.34. Here, out of this net present cash flow, my initial investment is 250. So the remaining 57,097 is the net present value. Okay, because I did not consider here, so 307,000 is net cash inflow. So in that I have 250,000, which is an initial investment I deducted. So net cash inflow I have 57,097. Now what is my internal rate of return? So for this, I will write the formula IRR, okay, and here no need of excluding the initial investment. So I'll consider from the first year to last year the net cash flow, and I'll close the bracket. So the internal rate of return is 13%. And if you want to see return on investment, now I have total outflow 332,000 and my net present value is 57,000. So how much my return from the investment equal, I'll write the formula here, equal 57,000, that is net present value, divided by total outflow, and I'll close the bracket. That is return on investment is 17%. My return on investment is 17%. Now In case if you want to change the discount rate from 3% to 4%, your values will change automatically. Your net present value will be 50,620. Internal return rate of return will be 13% and return on investment will be 15%. Friends, we have discussed 6 or 7 important financial functions in this session. If you like this video, kindly press the like button, and if you are new to this channel, kindly subscribe my YouTube channel RenwilEducate. I encourage you to watch my all previous uploaded videos so that you can improve your Excel knowledge. Also, don't forget to share my videos with your friends so that they can too gain Excel knowledge. Thank you friends for watching this video.